What's going on, YouTube? Today we're doing another stock video, and I'm gonna be adding Microsoft to my portfolio. And before you say anything, I'm gonna tell you why not to buy it, and then why I purchase it by looking at the numbers and why I'm purchasing it personally. Now I'm adding this to my dividend portfolio. I'm gonna be adding about $500 just to see what it does over the year, see if it drops, see if it goes up, and I'll probably add another $500,000 over time into Microsoft. Now, I'm building this dividend portfolio so I can have a bridge account for retirement. Now, that by Microsoft. First of all, the reason why you should not buy Microsoft, because the valuation is already very high. The PE ratio is very high, and it's a downside. And number two reason why is AI expectation AI expectation may be overhyped, and it could be the reason why it's dropping. Number three is cloud growth is slowing. Number four, the regulatory and antitrust pressure on Microsoft right now. And number five, it's already a $2.9 trillion company. Number six is the dividend yield is very low. It's 7. The concentration of risk. And number 8, there's better opportunities than Microsoft. But at the end of the day, those are the reasons you shouldn't buy Microsoft. Now, it is overvalued. It is dropping. So why am I buying the stock? So before I get into all that, if you don't know what a dividend is just a portion of the company that pays out for owning the piece of the company. And this video right here gives you a better explanation.
So what exactly are dividends? You ever heard of the term mailbox money, or getting paid while you sleep, or making money for doing essentially nothing? In this video, I'm going to teach you how to do those things, but with dividends. So publicly traded companies, right? These big corporations either make a profit or they don't. Now let's forget about the ones that don't make a profit for a second. Let's just focus on the ones that do. Have you ever thought about what these companies might do with those cash profits? What if I told you there was a group of them that have been taking those cash profits and paying those profits out in the form of cold hard cash to their investors every year for the last 40 years. That cash payment paid out to their investors every year is called a dividend.
Why am I buying this company? Well, because I think there's a good growth opportunity, and I don't buy any companies in my dividend portfolio if it doesn't pay dividend. And we're going to be looking at the finance and everything else to see how well it's doing and the reason why I'm buying it. So let's go into the stock of Microsoft. This is Microsoft. It hasn't been doing very well. It's at a 17.32% negative. So it's not doing so well. The 1 year, it's up 0.72%. 3 years is up 56%. And the 5 years is up 72%. Now, it does have a dividend payout. That's the reason why I'm adding it to my dividend portfolio. It does pay a small amount, a 3.64% for dividend. So it pays dividend, and that's why I'm adding it to my portfolio. Now, let's go into the nitty-gritty and look at the finance over the last year and see if there's a reason why it should be dropping. So first of all, it has a good net profit at 47.32, 35.72. So the net profit looks like it stays above 34%. That's a great net profit. The gross margin is 68%, which is really good. And this is quarterly. And it looks like it's still growing according to the revenue. So there's no reason why I should not buy it, especially if the income statement is looking so good. Now, the next thing is the balance sheet. What are they spending their money on is building AI infrastructure, and it's going to cost them money. So I want to see how well they've been handling their debts. So the long-term debt, they did borrow some money, it looks like, and they looks like they've been paying off their debts in the last 2 quarters. The reason why I'm buying them is because their debt is going down, their long-term debt. Now, the big part I do is I add up their assets and make sure that their assets are worth more than their liabilities. And right here, it shows that they are worth more. Now, let's look at the cash flow, see how the cash flow's been doing. So in the last year or two, they've been investing a lot of money into AI infrastructure. So I expect that the cash flow to be down in December. So, because they purchase, they build out, but let's look at how much money they have. So, March 2025, they had $20 billion, 25, and they used a good 20 billion for AI infrastructure, which makes sense. And the ending cash position in December 2025 is $24 billion. So, they have money. Now, they have been financial cash flow has been going up a little bit, down a little bit. So they look like they're balancing their books just fine. Now, another reason why I'm buying it, the growth opportunity according to AI is 5 out of 6, earnings 6 out of 6. I agree. Valuation is 4 out of 6, health is 4 out of 6, and performance is 4 out of 6. Analyst does give this a strong buy. Now, do I expect this stock to keep dropping or going up? I expect this stock, to be honest, to keep dropping and for the whole year. Now, the other thing you can look at is the Warren. Stock is going to be doing a layoff upcoming and see what they're doing. If you don't know how to check this, go to the WARN and .com and it'll tell you if a company's going to be doing layoff. They have to report if they're going to lay off more than 100 plus employees, at least a 60-day written notice so that everyone can understand. Now, this is a government protection for the employees. So if you need to look it up, just go to the Warren and see if they have a notice. Now, we can just go through this list real quick and see if they're going to be laying off anyone. You see that eBay laid off 101 to 250 company layoff. So Riot Games is laying off, but let's see if there's Microsoft on here. And right now, I don't see Microsoft, so they might be done with the major layoffs. So that gives me a better insight that they restructure, everything looks good, and yeah, I don't see Microsoft on here. Kroger, Amazon. So, yeah, I don't see a layoff for Microsoft. So, with that being said, the reason why I'm looking for that is because if you lay off an employee, they're more likely going to sell company stocks. So, if you lay off 1,000 people, well, if each one of them owns 1 or 2, 3 stocks, 10 stocks, they're going to sell them all, most likely. And that's what I've seen in the past. And what's that going to do? It's going to cause it to drop in pricing. If you have 1,000 people and each one has 10 stocks, well, guess what? That's 10,000 stocks being sold on layoff or that couple months. And especially with the dip, they're just going to say, you know what? The company's losing value. We're going to get rid of it. So this is one of the reasons why I check Warren on this one. So, but besides that, it looks like a good company to add because it's making more money year over year. Quarterly, it's been making more money. Overall, this is a solid company and they're not going to go anywhere. Should you add this dividend stock to your portfolio? Personally, it's really risky right now. It could drop another 15, 20, 30%, right? So you understand with this one, it's riskier, but I'm willing to take this risk because I think the reward will be better in 5 or 10 years. I think it will bounce back up. So with that being said, this dividend portfolio is not for short term. It's for long term. Short term, if you're going to purchase Microsoft, it's not a good choice. But in long term, after the AI centers get up and everything goes back up and going, guess what? They're making a lot of money. So with a solid finance, with a solid track history, and a solid growth for the company, it's a no-brainer for me to purchase this stock. Now, like and subscribe. That's all I got for you.